Good morning, everyone. Welcome back to Morning Cup by 8. Aiman here. All right, so let's take a look at the S&P 500 first. Well, it fell 0.79% to close at 7515 points on Monday session, snapping the 3-day winning streak in its largest single-day percentage decline in nearly 3 weeks now. So a sudden breakdown in the ceasefire negotiation and also the US decision, right, to I would say reinstate a trade blockade on Iran reignited the intense geopolitical tension, sending the crude oil as well. Surging higher by almost 4% and nearly dragging the high-flying chip and also the tech sector down, right? So, however, looking at its charts right here, the S&P 500, well, the market is actually not as aggressive as the first round of the war. As investors, I think have factored in some of the war premium right now. So, yeah, 7,500 still hold firm, right? As the immediate support at this juncture, right? So if you look at the US trading stocks that you have published yesterday, right? So yeah, we got Scope Tankers, stock code STNG, right? So the stock experiencing a breakup at 77 US dollar, and now we can expect that it travel towards the 83 US dollar on a strong momentum, followed by the next resistance at 89 US dollar level. Now, if the counter to reverse, do watch out for the 74 um, US dollar level. Also, next we have Meta Platforms, stock code META, right? So, yeah, again, the stock is experiencing a breakout as well, uh, above the 660 dollar level. The first resistance is at $700 level, followed by the next one is at 730 dollar level resistance, right? So do watch out for the 630 support for any attempt of reversal. So for the US, we have two breakout stocks, which is STNG as well as Meta, right? So looking at the China A50 futures, right? Well, it fell 1.11% on Monday session or the yesterday session, right? As the investor sentiment sour over the sharp flare up in the US Iran tension over the weekend. So I think yeah, the resulting 4% spike in the crude oil prices has hit the China market, heavily fueling the fears of the global stagflation, high input costs for the manufacturers as well. Um, yeah, I think the sentiment wise, still in neutral, we saw, right? Investors are still sitting on the sidelines, to see if there's any further development and data feel for the market for this week. Well, the index is now resting at the 14,700 points again, right? After declining from the top of 15,500 points level. Now, shifting our focus to the WTI crude oil futures. Well, it surged aggressively on Monday session, following the U.S. President Trump, right, announced that the U.S. will reinstate a full naval blockade on Iranian ports, right, and so the rally was, also further intensified by Trump's highly controversial proposal. If you see here on the news, right, to impose 20% toll on all cargo that pass through the Strait of Hormuz, which also triggering the immediate fears of supply disruption. So from the charts here, we notice that the support of 68 dollar, right, hold firm for now, and the commodity has crossed above the 21-day SMA lines. Yeah, sentiment has not turned now turn positive, and price may trend up higher if if the tension intensify further. Right. So looking at our Malaysia market, well, the FVMKLCI, or our local index, right, rose by 0.41% to close at 698 points, while the FKLI gained 0.35% despite the broad regional sell-off triggered by the escalating uh, geopolitical tension. So I think domestic sentiment was heavily anchored by the political certainty after the Johor state election is over last weekend, alongside with the strong defensive NC rotation into the plantation and also the commodity related sector following the hiccup in the oil prices. Meanwhile, taking a look at the FKLI chart here, the index futures gain traction. Yes, on Monday session, right? Testing the 50-day SMA lines, ending in a positive territory after it initially, test the intraday low at 1683 points, but managed to close above this 1700 level. So indicators are also showing a positive sign with still within our expectation. So after it breached above these 1007 points yesterday, we then now aim for the 1730, followed by 1760 for the resistance. Well, SL remains at 1650 for now, right? And then on, if you monitor the market as a whole, right, heavy institute buying is now lifting the banking names, large cap plantations as well, and also the energy plays, which also provide a powerful cushion for our market. Well, on the other hand, the tech, the tech electronic tech, sector are seeing in heavy Red Sea. But just to experience a healthy pullback in nature. Looking at moving to our Malaysia trading stocks. So today we have Heng Yuan Refining Company, right? Or Heng Yuan, the oil and gas company. So the stock is on its breakout formation, higher at 1.25 level on a strong volume, right? So with that, we expect the momentum to keep bullish and the stock able to propel higher to test the next resistance. We're getting 40 cent, followed by we're getting 50 cent for the second resistance. So if the stock to clear below this, we're get 15 cent support. This could reverse the course and trend lower below this 21-day moving average. And also next, we have Cent Capital, right? So the stock is experiencing a breakout as well at 83 cent level. So if the stock remains bullish, we expect the price to reach 87 cent in the coming session, and to reaching this level could propel the stock towards the 91 cent level, right? So do keep an eye at the 79 cent level for any attempt of reversal. So today we have two breakout stocks, which is Heng Yuan and also Cent Capital. Cent Capital. So do put this in your watch list as well. Right, so just to share with you all, right? So something that caught my eye this morning, right? So the blue line is gray tag price movement, and the candle is actually the Bursa Industrial Manufacturing Index. So if you look closely, right, the index is now setting a stage to charge higher after it rebounded from the 200-day average line, or this yellow line, also aligned with our 61% Fibonacci retracement level, which also showing that the pullback deemed to be completed, right? So we see that retail may be the laggard from the index for now. However, if you believe the sentiment remains up and also positive following this index, right, or these manufacturing names, so you may add great tech in your watch list as well. So maybe you can take a look at Retech, Hang Yuan, and also Teo Sang. And lastly, for the FCPO, it closed marginally higher by 0.49 or 0.5% on Monday session, charging back above 4,500 on weaker ringgit, and also on market provided immediate feedstock support. So gains were strongly anchored by the long-term supply concern regarding, an intensifying outlook, and also the Indonesia mandate, right? So the upside remain heavily capped by an underlying month-on-month build up in June inventory. So I think regardless of that, market are still now moving in a sideways or the seesaw pattern, right? Sentiment remains neutral to boost for any breakout, uh, break above or breakdown, if bullish to return to the driver's seat, right? Hence, we are now still hold our negative trading bias, with stop loss continue to be at 4,700. Well, unless the commodity to cross above our SL, we won't change our trading direction for now, right? So support remains back at for 390 and also for 250, right? So yeah, that's all from me, and I'll pass the floor to the thanks everyone, and happy trading.
All right. Good morning, everyone. So today we have a ground checks report on NextDC. Let me just share my screen for a bit. Okay, so last week we actually went to visit NextDC's data center in called KL1 in PJ. So if you see, right, there's the total build up is going to be 65 megawatts of capacity divided across 5 stages. So at the moment, only stage 1, 15 megawatts is operating, and it has commenced operation since May this year. And at the moment, stage 3, stage 4, stage 2 is currently in construction. Just that stage 4 is currently undergoing piling. So in terms of the beneficiaries for this data center, if you were to see in this part over here, it's basically your Mitra Jaya. So Mitra Jaya, they've been completing a lot of jobs from KL1. And if you were to add all this up, it's around 980 million ringgit. And if you see, it's up until stage 4 at the moment. And another interesting thing that we recognize is that, why PJ and not Almina or Cyberjaya? And in fact, the land price in PJ is actually a bit more expensive compared to Cyberjaya and Almina. So the reason as to why all these data center operators would want to be in PJ is because they claim that it's closer to their clients, and I think that's also a factor of latencies that influences such decisions. And bear in mind that there are also other upcoming data centers in PJ. For example, there's this company called Lamchang Tuanwah Property, which is planning to build a data center in Section 13 PJ, and not to forget other urban data centers such as the Exim Bukit Jalil Link, which is currently being constructed by Binasra. So, all in, we think that the landscape for data center demand continues to be commendable for Malaysia, and because of that, we continue to be very positive on this sector. So that's it from me, everyone. I'll pass on the floor to my colleague Meng. On to you.
Thank you, Adam. So next on is we have company update notes on Cnergenz. So Cnergenz, we're basically raising the target price from 62 cents to 71 cents, and still maintaining our buy call on the stocks, about 20% upside from current price. Basically, we think the FY26 earnings recovery underpinned by the strengthening order book growth momentum which will continue to provide strong visibilities into 2026 onwards. Now, the cumulative FY26 order book has now surpassed FY25 full year revenue of 115 million. As of end of May, I think the group outstanding order books now expanded to 190 million, which provides 1.65 times cover over FY25 revenue. This is a significant up, from 82.2 million of order book as of end of March. Now, all these order book are supported by three different segments. I think first of all is on the AI related demand for SMT equipment, which they have gone into commercializations. We foresee the ramp up is going to happen from now onwards. There were about 20 units being delivered in the past 1 to 2 months, and we understand that there are further 30 more units are expected minimum, to be delivered in the second half of 2026. Now, the development of a new soldering platform, with another European customer is also ongoing, potentially boosting, the total number of testers to be built. Now, on second segments is on the SMT distribution business. These are also, on the rise, and especially, on the integrated solutions, which is the entire SMT lines, are also encouraging in terms of the order book. And I think now, it's probably accounts, for 30 to 40% of the total outstanding order book, which will again, provide a strong, order visibilities towards entire 2026. Now, thirdly, I think the visibility of the smart factory is also gaining some tractions, although it's now a small contributor to entire order book, about 2 to 3%. The managements share that, they are close to securing another 10 million worth of orders with regards to warehouse automations from a US EMS customers. Again, if this is successful, I think the revenue recognitions will going into second half of 2026, which again provide a very strong growth year on year, from 2025 trough revenue as well as earnings to strong recovery in 2026. Now, we raised our FY26-28 earnings by 2%, 14%, and 13%, mainly to reflect a stronger revenue assumptions following the significant improvement in the order book growth. We continue to expect margins to improve on the back of better operating leverage, especially from second quarter onwards. Now, the higher, deliveries of all those orders will take place, from second quarter onwards and more towards the second half of 2026. Now, we maintained, our valuations of 21 times, which is about 1 standard deviation above its 5-year means on FY27's earnings. The target price is now raised to 71 cents. We still maintain a buy call on the stocks. I think that's all from us today. Thank you for listening. We hope to see you again tomorrow.